Good morning, Brian Johnston, talking this morning on a brief historical background and giving basic learners trying to give the understanding of hedge trading as pioneered in a large extent to Julius of 101 on the Forex factory. This normally takes at least 12 months in demo to test it and use it until one becomes familiar with it, and it has one advantage of making high pips, and like a two-edged sword it has the other disadvantage of where you lose lots and lots of money. We're trying to teach another method how we can use this great pioneering work of 101 to help you on your way to success. First of all, just basically the idea behind him was when the anchor currencies, and you can note that I've put them there for the 14 currencies, you put them on your sheet as a buy and a sell, one lot of each in demo. I have say a sell and a buy like this. This is just basic. I'm no expert on his course, but just how I understand it. That when the anchor currencies move over into profit, the whole five must move over into one section. In this section you see one that's in a profit here, another one in the loss, another one in the loss, another one in the loss. So either if they all move over here into a profit, it's a time to go short, which this is currently giving you a trend of between the buys and the shorts, which one is higher in profit. But when these five move over into, say, the buy section, where there is 1, 2, 3, 4 currently, if this fifth one moves over, then you would place, in the old theory, buys on the whole basket of 14. Now this had some tremendous pip profits if the whole 14 went into profit, but it also had a disadvantage if only some didn't go into profit. Once you break up the basket, of course, you're in danger of huge drawdowns. But that was the general principle of using anchors, and as you can see, once again, the anchor to go to buy is 1, 2, 3, 4, and you're looking for a fifth to move over, and then if this says go long, go long. The disadvantage was this was based over different times where you reset, and there are a few drawdowns to the system, but the biggest one, of course, is you should never put at risk more money than you can afford to lose. And putting 14 currencies on, one requires a good size account. This is basically the 14 currency anchor positions as I'm moving, showing it on here in another format, and as these move into position, very similar to the spreadsheet where you put the 14 on, you can use this instead and then look at when they all go into buys and sells and look where the anchors are, etc. Also, it gives you the profits on the JPY and the US dollars. This is basically the system in a very brief nutshell, and I'll refer to the anchors, the 14 currencies, which had a hedge that was under the market inefficiency average of 5%. And this will mean that it will go from profit to loss to profit. I'm not going to alter this just yet. Profit to loss to profit. So we've covered that in a nutshell, just as a brief, and I'm not going into this core thresholds, all positive, all negative, but basically that was trying to establish a 0 point. Now many had attended Julius's courses 101, which I thoroughly recommended to get a basic understanding, and we're trying to do it in a short video, but I'm just highlighting the major points, not as the Sunday opens, weekly. We want to now move over and just have a look at Brian's new compatibility. I'm no expert on this, but the system I've developed is based to a large degree on using the 0 point, which I explained in another video, that if we look at his 14 currencies, here we are here, and we have here the 1379 of the buys or sells. Because this can change, it's based on these areas here, but basically we have at this current stage 1,379 on a correct entry and 1,335. When that goes up and they're both equal, that is the time that the basket is likely to move. Now, in the old theory, using 101s, this was placed on the 14 all moving in the same direction. But we know there's huge market fluctuations, and this can involve drawdowns. My system involves you putting the hedge of the 14 on exactly when these two get into 0. In other words, what I say is they're both equal, so that the total of the dollars is equal. The reason I don't like the pips is pips have different dollar values. We're just looking at the dollar values, and that is exactly the same what I described in the currency above. Now, in the lesson 1, I described that to you there. Now, also, just as a quick brief, we have our charts, and you can see the highest high year to date, the now price, the closing price, you're below that, etc. So there is plenty of information on this basic spreadsheet. The information was obtained through a great personal contributor to our Forex on Skype group, Pilksy Duskin, that modified and helped set up the original sheet. I did lots of my own what-ifs, and the spreadsheet developed into quite a substantial information sheet. The old information sheet on the, and I'll just go quickly through some finer points, based on the volume movement is how this 0, 0. So that original both coming in base through here on this area here was how the demos reverse and true entries went in. Really the information here tells you of the 5-9 cross and the 9-21, and you can see in red and green the huge crosses. There was an old theory that when you had all red in the 9-21, then the market was due for a major change. So if they're all red here, you're in for a short. If they're all green, you're in for a long. This system gives you a few basket choices. Personally, my own is this one here, but where I use the 6. In other words, these 3 here and these 3 to develop your own formulas and thing. The area here was a difference in pips from the Friday close, and as I said, it was a full circle. This is the problem with the original hedge for huge drawdowns. I developed a system for myself that seems to work and makes me money. This is just a brief introduction to Forex systems. On here we have exactly the same thing. There's the movement of the currencies, the slot positions. As they move up into the slots, you can see the cells are the most strongest at the moment. See, they occupy the most slots down the bottom. It's funny. This is exactly what you will get in your Forex spreadsheet. So you can work off that quite easily, and you can certainly go into the main and get some distances, get a lot of other information. The 5,920, which here is negative. The distance from the close, pips from Friday's close, the current price, etc. Signals, you have them all here. The main one is another one here where information is taken. The data here is please don't touch it. You can see here that of course you could change it a little bit and have your own name on there. Duskin and Pepsi did me a great honour to put that here. Alright, I've done a lot of contribution too to the sheet, and here we have some further information and test triggers, and everything is handled through the macros, which anyone knows the use of macros. I'm quite familiar with Excel sheets, as I use them in business for many years. And if you use macros, you can do lots of things, and this is how this is all based on macro information. Once again, this is just a basic introductory method of using the Excel spreadsheets as contained in Brian's packages. It's great gratitude goes to 101 Julius for his historical beginnings in spreadsheets, hedging programs, strategies, etc. We've just gone one step on from that and using the points of entry as to being, as you remember, as to being when these two are exactly equal, then it's logical you can put on your trades. Once again, my thanks to all Brian John's World of Brian Skype Forex people. I'm sorry guys, I haven't had as much time to spend with you, but we're developing this for everyone. Remember, trading Forex carries risk. 95% of traders lose money trading the Forex. Think about it. It's the same percentage as businesses that fail in their first year. Why they fail is they do not use correct business management techniques, managing their overdraft facilities, which is drawdown, using other people's money to make money. My method on, and I'll just reiterate it to you so you can look at it yourself in detail, of trading methods, is used on the Forex. No, we'll leave it here. It's used on the Forex in the traders platform and under the amazing magic of Brian John 3MW now. So there is a lot more information there. This is just a basic introductory course of basic hedging and using the spreadsheets to help you make a decision. Whether it's the right decision or the wrong decision is based only on you, how you perform trading the Forex. I wish you all the best and the success in the future, and remember, by giving we gain 1,000 times more than we give. God bless all of you from Brian. Bye for now.